Welcome to Save U.S. Taxes Legally. I want to start off with 3 simple questions, okay? Please put yes or no into the chat. Number 1, do you want to leave a legacy for future generations? Please put yes or no into the chat. Second question, do you want all lawsuits to go away? Say yes or no in the chat. Number 3, do you want to save taxes year after year, generation after generation? Put yes or no into the chat. That's all our aerobics for today. Welcome to Save the Secret of the Rich, Save U.S. Taxes Legally. I want every U.S. investor, U.S. business owner, U.S. entrepreneur, U.S. franchisee owner, and U.S. 1099 income earners to learn the secret of the rich. I believe since I learned the secret of the rich, it's my honor and my duty to teach it as many people as possible. This is not taught in schools. I also believe the playing field must be leveled for everyone. The Amazons of the world get free land. My brother's brewery lost their lease because the rents went too high. Imagine never paying taxes ever again. Even if your great-great-grandson thinks you're crazy and in 2095 cancels the EIN number, your great-great-grandson is responsible for the taxes that would have been saved in 2095, not the taxes saved in 2025, 2026, 2030, 2040, and everything else. Imagine how much money you will save, how much worry, anxiety, and time you will save if lawsuits go away. Imagine nobody knowing what you own, where you own it, or how much you own. My name is Sally Gimmon, and I'm the owner of The Trust Is You, and I want to thank you for coming to my presentation today. Let's get started. Oops. That was at the end. I had bombers on my earlier presentation, so that's why I have to do it this way. This will save you. I leave a legacy. You'll be judgment proof and complete privacy. My website, www.thetrustisyou.com. My free class in the Great Discovery that can be translated to 165 languages is www.sallygimmonsquishedtogether.com. So let's get into this. Now, this is the 2021 tax brackets. As of today, they still have not released 2026 tax brackets. Check this out quietly. On January 1st of 2023, they changed things up. There's 4 ways to file your taxes. Single is the most expensive way. Head of household is if you are a single parent with kids 18 or younger. Married filing separately, and married filing jointly, which is the cheapest way. On January 1st of 2025, quietly, the IRS changed married filing separately to be the same level as single, all the way up to 37% tax bracket. If you get nothing else from this presentation and you are married, please file jointly. Check this out at 35%. You're going to be paying 35% at $250,526. When you're filing married jointly, it's almost double that, $501,151. Now, to give you my personal story, I started both my business and beneficial trust in September of 2000 when my CPA called me on April 1st to tell me my tax bracket went from 22% to 24%, and I owed the federal government $94,000. I only had $50,000 saved for capital gains. It was the middle of COVID, everything had shut down, and how I was doing real estate with bank-owned properties, nothing was moving. I had to find a solution. Now, this is an IRS Tax Code 643B. I want you to do as much research as you can. Every CPA out there pulls up the IRS opinion letter dated August 9th of 2023, where the IRS actually says they do not like IRS Tax Code 643B. They do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. It's their opinion. They can't change it. Only Congress can. In my opinion, lima beans are the worst vegetable in the world. I do not like vegetables, and you cannot swallow lima beans whole. Yuck. So let's go over, you need these 5 elements. Irrevocable goes from generation to generation to generation. The Rockefellers Spendthrift Trust is called the Office. It's 7 generations old and has 400 people under the same EIN or employee identification number. Each separate family files their own 1041 tax return with the EIN, but there's no commingling of the money. Complex. This trust, 97% of trusts sold in the United States are what my mom and dad had and what Susie Orman talks about on PBS television. The family trust or the living trust. It avoids probate and then dissolves. This trust is not the family trust. When my mom and dad both pass away, all their assets had to be divided. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. The law firm I work on behalf of, that was started by a Harvard law professor 77 years ago, and is now run by his grandson and great-grandson, inherited a trust that turned 350 years old in 2023. It's 352 years old right now. Our current tax structure that we are under went into effect February of 1913 and was only supposed to be around for a few years. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys, made sure they could save taxes. Well, they can save taxes, we can save taxes. Again, the IRS does not like this. Only Congress can change the tax code. Our current president's father, Frank Trump, started this trust in 1972 when Frank and Donald Trump got sued by the city of New York for discrimination. Back when he debated Hillary Clinton and she accused him of not paying taxes, he says because he was smart, it's because his father started this trust. Discretionary. Whoever is a trustee or trustees can make the rules for the beneficiaries. There's no infighting, there's no taking this to court or anything else. They can make the rules. One of my clients, a husband and wife with 4 apartment buildings in Los Angeles, had let their adult daughter live in the apartment. She has a slight problem, and they're making her do 4 random drug tests per month, and she actually took them to federal court. The judge read over the trust, and he told her she has 2 options. Option A, move out, start paying her own rent. Option B, stay in the apartment and pass the 4 random drug tests. There's nothing he can do to change this because she's the beneficiary of their spendthrift trust. Non-Grantor. This is going to make the trust completely private. When my mom and dad started the Gimmon Family Trust, real original, they were both the grantors and the settlers of the trust. When both of them passed away, their trust dissolved. With the non-grantor, you're going to have someone who will never be a beneficiary, never be a trustee of your trust, who will sign up to be the grantor or the settler, and then they will sign themselves away almost immediately. I used a family friend, Roy, to do this. Unfortunately, he has passed away since then. It's not a speed bump. You do need this person's social security number. I have personally done this for several of my clients. It's not hard to do. And then finally, spendthrift. This has been in front of the United States Supreme Court on 2 separate occasions and won both times. You can't get more legal than that. Now, Paul Benson, a Harvard law professor, wrote 5 separate spendthrift trusts to save specific taxes. We're only going to talk about 2 of them here. The business trust is for US business owners, entrepreneurs, franchisee owners, and 1099 income earners. You will save at least 90% on federal income taxes yearly, and in 43 states no longer pay state income taxes. The beneficial trust is for all investors. You will no longer pay capital gains, interest income taxes, dividend income taxes, rental income taxes, and royalty income taxes. The mineral rights trust, I've only sold 1 of those. One of my beneficial trust clients inherited his granddad's horse farm in Oklahoma. On the horse farm, there are 6 functioning oil wells. The money he makes from the 6 functioning oil wells go through the mineral rights trust, not through his beneficial trust. Then there's a charitable trust. Several of my clients are saving thousands of dollars. One of my clients who got to save over $185,000 in interest income taxes started a charity for people coming to the United States with nothing on their backs. His wife was a Vietnamese boat person, and they're putting a lot of money into their charity. And then finally, there's a senior trust. This is a blind trust. The senior has no access to the money. I only sell it when the senior has been incapacitated. Maybe they have dementia, a heart attack, or a stroke. If someone's over 65 and has all their senses, we don't need to do that. So we're talking about the business trusts. This is for all U.S. business owners, entrepreneurs, franchisee owners, and 1099 income earners. If you're making at least $100,000 gross per year before anything's taken out, you will save 5 figures. This is an actual client who called me on January 3rd. Ladies, he's single. He's 29 years old. He was in the military, and now he works for a defense contractor in Virginia. He knew in 2024 he made $150,000 as a 1099 income earner and had nothing to show for it. He's living in an apartment with 2 roommates and driving a 10-year-old car. If he plans to make more than $150,000 in 2025, but we used $150,000 just as to give him an idea. At $150,000, saving 90% on federal income taxes, he would save $25,962 per year. On top of that, Virginia state income taxes at 5.75%, he gets to save $8,625. Add the 2 together, for a full year, he's going to save $34,587, or per month, 90% on federal income taxes, and no longer pays Virginia state taxes, $2,882. Now, today, I talked to a gentleman with a franchise company. He's in Ohio. They are going to make $175,000 right now. Unfortunately, 2026 tax incomes haven't come out yet. But if he had it for the full year, he would save $25,491 in federal taxes at 90%, Ohio state income taxes of $5,250, for a grand total of $30,745, or per month, $2,562. Again, each state could have 42 states have state income taxes. This is the business trust. My first property in the beneficial trust, I bought in July of 2020 in my LLC for $20,000. I knew with the contract, it was a bank-owned reverse mortgage. I had the contract. It was going to go to auction for $50,000. That $30,000 in the spread at 24% would be 24% would be $10,110. I started both my business and beneficial trust in September of 2020. I did 2 simple bill of sales, one from my LLC to me, Sally Gimmon, second bill of sale from Sally Gimmon to my trust. I went to the bank, got him notarized. My banker, Jose, while he's notarizing it, I took $10 out of my wallet. He wrote in his book, consideration was made. Drive back home in Phoenix. I scanned them and sent the 2 contracts to the attorney in Raleigh, North Carolina. The next day, the attorney asked for my first page of the trust, sent that to him. The property did not go to auction until August 28th of 2021. The final bid was $64,326. Without lifting a hammer, Sally Gimmon made $44,326. More importantly, at 24% tax rate, I got to save $10,368 I'll never have to pay back. And I put that into more real estate. Now, the beneficial trust is going to save the following taxes. It's going to save both short-term and long-term capital gains. Long-term capital gains is going to be another slide. Short-term capital gains are when you are selling crypto, you're an options trader, you're a forex investor, you're wholesaling, you're fix and flipping, my auction house, tax liens. They're taxed just like federal income taxes. And if you make $50,000, this is how much you'll save per tax bracket. Interest income taxes are for passive investors. Maybe you're in a mutual fund, you're in a REIT, you're doing subject to real estate, the BRRRR strategy. I have notes where on the paper in the house, people pay me their mortgage. Creative financing, seller financing, and forex investors. Forex investors, you get taxed twice. Capital gains and interest income taxes, you need the Spendthrift Trust. Dividend income taxes. If you're in the stock market, you're a day trader, you're a futures trader, you're doing commodities, or you're living off of dividends, you need this trust. Rental income taxes. I don't care if you're in short-term rentals like Airbnb, vacation rentals. Maybe you have 3 doors, 5 doors, 10 doors, 20 doors. You're in multifamily, apartment buildings, you're in commercial property, or you're doing Airbnb arbitrage. Yes, you can move a property on a depreciation scale into the trust. Yes, you can move a property on a cost averaging into the trust because 40% of LLCs, S corps, and C corps get sued every year. You can't get sued in with the trust. And if the renter's dog gets out and bites a mailman, they can't come after you. The one that's not on here is royalty income taxes, taxed a little bit less, 7 different layers between 10% to 35%. And they affect you if you're an actor, an actress, you're a musician, you're an author, an artist, you're in an NFT world, you have copyrights, patents, or intellectual property. The late Robin Williams had Beneficial Spendthrift Trust. His 3 adult children pay no royalties on any of his comedies or movies or anything else. It's an amazing thing. Now, long-term capital gains are when you sell a business, you sell an investment property that you've had for more than a year, or a baseball card. A son saw my TikTok video, contacted me. His parents were selling a 42-year-old restaurant that his father, Jim, and his 2 brothers had built, as is, for $3 million. I contacted Jim. He'd never been on Zoom, so we talked by phone. Jim tells me I'm working with a business broker named Sam. The sale is going to be March 30th of 2023. I call Sam the business broker, tell him we're changing the name of instead of being Jim and his wife Ann, we're going to change it to the trust name. Sam says, I'm going to make $30,000 off this deal and several other deals. I need the business trust. He buys the business trust. I tell Sam about my affiliate program that if he tells others and they buy a trust, he'll make $1,000. Sam's like, let me call Michael, the gentleman who's buying this family restaurant. It's going to be his 7th family restaurant in 3 different states. And Michael's like, I'm going to save how much in taxes? He bought the business trust and Sam made an extra $1,000. Now, several of my clients are running into this. One of my clients who called me, who are in their 70s, we're going to save them quite a bit of money in dividend income taxes. When I told them about IRMA, they knew what I was talking about. If you're 65 or older and on Medicare, every October, the IRS goes back 2 years. This October, they're going back to 1040 tax returns 2023. The trust files a 1041 tax return, so they don't know about this. What they're looking for is everything put together. Social Security, pensions, wages, 401k and SEP withdrawals, interest income, capital gains, dividend income, rental income taxes, everything else. This husband and wife who made very good dividend investments, we are going to save them over $480 per year, both on their Part B, which is your doctors and medical tests, and Part D, their prescriptions. Besides no longer paying dividend income taxes, they're going to save almost $1,000 on their Medicare. I cannot save them the $185 they do have to pay that regular people are paying, but they're not paying IRMA taxes on their dividends. Now, this is just a quick overview. If you would like to set up a 30-minute tax breakthrough session with me, it's www.thetrustisyou.com/scheduling. My free class on the Great Discovery that can be translated to 165 different languages is www.sallygimmon.com. I want to say thank you for taking the time to watch this video. to learn how to save US taxes legally. This is not taught in schools. It is the secret of the rich. If you have questions, don't hesitate to set up an appointment with me. I work for Benson Financial Trust. Again, Paul Benson was a Harvard law professor who wrote 5 specific trusts, Spendthrift trusts to save specific taxes. Now his grandson and great-grandson run the law firm, and in 77 years, not a single trust has ever been audited. They're so confident in what they do, they'll give you a certification saying if you get questioned by the IRS, they'll defend you free of charge. In 77 years, it's happened once. Thank you for watching my video. I hope you have a beautiful week and start saving taxes like the rich do. Take care.